Hey everyone, Sebastian here. I hope you're all doing well and thank you so much for watching. So in this video I wanted to discuss how you can improve your credit score within 6 months and get it above 800 points. In the first part of the video I'll cover how your credit score is calculated, and in the second part I'll cover how I increased my credit score in 6 months to over 800 points. So there are 3 credit reporting bureaus: TransUnion, Equifax, and Experian. All of them are used by the majority of the banks and lenders in this country. Your credit score is based on a system from 300 to 850 points. The lower the credit score you have, the less likely you're able to get good credit and along with better interest rates. Bad credit scores are from 300 to 629 points. In that range, you're not likely to get any great rates with opening up any new credit cards or any loans, if you can even get any loans for that matter. Fair credit scores are from 630 to 689 points. Those credit scores will allow you to get better rates. You'll also be able to obviously get loans and credit cards opened up in your name. Otherwise, you may have to get secured lines of credit through different banks. Good credit scores are considered to be from 690 to 719 points. In this range, this is where the vast majority of Americans, including myself, fell into before I was able to improve my credit score. And great credit scores are from 720 to 850 points. The importance of having a good credit score cannot be stressed enough. The better that your credit score is, the less likely you're going to get higher interest rates, so you're going to get nice low interest rates. And at the end of the day, you're going to be able to save money, which is always a great thing. So what factors impact your credit score? There are 5 factors that the credit bureaus look at when applying a score to your credit score. The first one is payment history, and it accounts for about 35% of your overall credit score. Payment history is probably one of the most important factors that go into your credit score. This includes if you had any late payments, if you pay on time, obviously that's a great thing, but this is the one thing that can lower your credit score the fastest and the greatest amount. The best thing you can do to improve your credit score is just to make on-time payments every month. The next factor is credit utilization, and it accounts for 30% of your credit score. Credit utilization is the portion of your credit that you utilize. So if you have $30,000 in on an available credit and you're using up 15,000 of that, well then your credit utilization is then 50% of your overall credit. That's a bad thing. The credit bureaus usually want you to have below 30% and ideally under 10% of your credit utilization. The next factor is the age of your credit accounts, and it accounts for 15% of your overall credit score. If you're just starting out with you're 18, 19, 20, you're going on to college or graduating from college and you're just starting out, you can have your parents sign you up for a credit card on their name, open up an account with them, do anything like that that will improve your credit score. If you're obviously a little bit older, in your late 20s, 30s, you want to make sure that you have credits that are old, they're open, and they're not delinquent or late in any way possible. The best thing you can do is not to close any of your credit accounts. I know it's kind of counterintuitive, but for the credit bureaus, you're better off leaving those credit accounts open as long as possible. The fourth factor that goes into your credit score is credit mix. So you want to make sure that you have a good mix of credit, loans, mortgages, auto loans, things like that. The more of a mix that you have, the better they are able to calculate a good score for you, because they can see that you're a good borrower and you pay on time, and that helps out tremendously as well. And the last factor is new credit inquiries, which makes up the last 10% of your overall credit score. There are 2 types of credit inquiries that you can have on your credit file. One is a hard inquiry and one is a soft inquiry. Hard inquiries include any time you apply for a new loan, a new credit card, a new mortgage, a new auto loan, anything like that will be a hard inquiry on your credit score. Soft inquiries include any inquiries that you already have or business dealings that you already have with your banks, your credit card companies, your auto loans, things like that. They can also include sometimes your employers will require to get a credit check on you. Those would be all soft inquiries on your credit score, and they don't really count that much. Actually, they don't count at all. The thing that you want to limit the most is the hard inquiries. Limit those to 1 to 2 hard inquiries per year. Otherwise, you can have a dramatic negative impact on your credit score. The biggest takeaway from these 5 factors is to, number 1, always pay your bills on time. Never have any late payments show up on your credit history. Number 2 is limit the amount of hard inquiries that you have on your credit. The third is always have a good mix of credit cards. And number 3 is to utilize less of your credit than you have available to you. Always try to keep it below that 10% utilization as best you can. Lastly, the best thing you can do for yourself is to check your credit score and your history at least once a year, annually. There are plenty of free websites where you can get your credit information for free without having any impact on your credit score. There's also businesses that you might be dealing with already, like Chase or Capital One. If you have credit cards with them, they'll have a section in their websites where you can actually see your credit score and see how you're progressing, whether it's going up or down. They can tell you exactly if your credit utilization is going up or down, or if you have too many hard inquiries. All that information is there for you to be utilized to improve your credit score in the long run. Here's a little pro tip for you. You can always freeze your credit, so that way nobody else can open up an account in your name, and that way you don't have any fraudulent charges on your accounts or anything like that. Your credit is basically being protected. When you go and open up a new account or get a new mortgage, a loan for a car, you can always unfreeze it and then freeze it again to protect your credit history. So here's what I've done in the past 5 to 6 months to improve my credit score from 727 points to 802 points. The first thing I did was I knew that the interest rates were going down, so I refinanced my mortgage. By doing that, I was able to lower my payments, was the first thing. The second thing I did was get rid of the PMI, and the third was to remove the escrow account. By doing all those three things, I was able to save about $1,200 a month on my mortgage payments. With that savings, I knew that I wanted to pay down my debt as fast as possible to get my credit utilization down as low as it could go. By paying down my debt every month, I was able to see my credit score increase over those 5 months. So in September, I was at 727, and by the end of January, I was up to 802. The goal for me was to increase my credit score as best as I could, because I knew that in 2021, in the spring, I wanted to purchase some rental property. I wanted to start out with a single family home, rent it out, and then repeat the process again, maybe once more this year. By improving my credit score, I knew that I would be able to get a better rate on my mortgage, especially since it's going to be an investment and not a personal home mortgage. Now, if you can't refinance your mortgage to save money so you can pay down debt or do other things with it, there are other ways you can save money. I've made a video for it or on the topic. You can check it out later on. And I've also made a video on how to refinance your mortgage and the benefits of doing it. With that being said, thank you so much for watching. I hope you've learned something from this video that you can use in your own life to help you grow your own wealth. If you enjoyed this video, please consider subscribing to my channel and hitting that like button. It helps me out tremendously. Thank you. Lastly, if you'd like to support me, please consider checking out my Patreon page. The link is down below. Thanks again, and see you in the next one.